Redfin is selling off big time. The stock is down roughly 25% after they reported their earnings. Scrolling up to the monthly chart, the pullback can be an opportunity to go long as the bottom is in. Now, before we continue with analysis, let's get into this article from Greek Wire. Redfin shares sink 10% as the CEO says housing market sales volume is near rock bottom. So the stock sold off in after hours Thursday evening, and we see the gap down and go on Friday. This company reported a 21% drop in revenue as it continues to face headwinds from a slumping housing market. The Seattle real estate giant reported total revenue of $276 million, down from $349 million in the same period a year ago, and narrowly missing Wall Street's expectation. The company's real estate service division, its primary source of revenue, dropped more than 28% to $181 million. The revenue decrease comes as real estate transactions volumes plummeted to the lowest level in at least a decade, with just 1% of the nation's homes changing hands in the first half of the year. A la thank you, interest rates 5+% for a 30-year mortgage. The company expects to break even on an adjusted EBITDA basis over the next 12 months, rather than reach that goal by year end, which Kilman called a setback. However, the company forecasts improving its adjusted EBITDA this year by more than $140 million. Kilman did call out some signs of hope. He cited the Federal Reserve's optimism in avoiding a recession in 2024 as a potential boon for the company. I guess we'll have to see whether we go into recession or not. Redfin's mobile app and website had more than 52 million average monthly users, slightly down from the 53 million in Q2 2022. But we're seeing it from the companies such as Zillow as well. They're having hard times too. All right, so let's go back to the chart, and we could see price continue to decline. With the 13 simple monthly moving average serving as support at roughly 850. Let's go to the weekly chart. And prices now and will close below the 13 simple weekly moving average. And that's okay. In trends, you have impulses, pullbacks, impulses, pullback, impulses, pullback. And I say that's okay because during the start of the uptrend, price did not get below the 26-day moving average, weekly moving average, right? So as long as price stays above $10, we should be in good shape for the bulls. However, on that monthly chart, that monthly moving average was around 8-ish. So let's draw just two lines. 8 was the monthly. Let's put that in white. Actually, let's put that in red. And then $10 is potentially where you can start adding into a position. All right, let's go down to the best level to get long is the monthly bias level at $4, but I don't see that happening. I don't see price getting that low. All right, this is the daily chart. And you had a nice impulsive move higher, but on earnings, dismal earnings, price just went below that. And we'll close below that by the end of the day. All this sideways trading ashing signifies there's no imbalance between buyers and sellers. So you want to go lower. So I'm going to move this. I'm going to shift this whole zone down because I want to capture this drop in price, basing, and then rally higher. This pivot low signifies there got to be buyers here somewhere. So I like this area between $9 and just say $7. $8, $9 is roughly where the 200-day moving average is also at right now. That should serve as dynamic support. So here's the trade setup. Let's see if price can get down into this area to push higher. First zone, first target is going to be $14. That's where you would see a gap fill take place. Based on a hard close down today, I'm anticipating next week we could see a further sell-off. But between 9 and 7, the chart suggests to go long. Thanks for watching. Subscribe. Please like the video.